Hello friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about GENUS Power. Will it perform and how big can it perform? In my opinion, this can be pretty big in the next 1 year. So I'll explain why I think this can double in the next 1 year. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Genus Power, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. If you pay $100 upfront, you get 1 year access by paying for 10 months. That's a 16% discount. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can join me on YouTube and you get all the benefits of Patreon through YouTube, through different posts, and you can say live member post, and 4 exclusive videos that come every weekend on results of stocks. Now about the company. So GENUS Power was established in 1994 and divided into, you can say this is a GENUS group which is divided into GENUS Power and GENUS Innovation. They provide electricity equipment and solar solutions across the board. The clients include SL Group, CESC, BSES. So they bring in, you can say, smart meters for these companies. It is a leading smart meter provider and helping in rural electrification as well. And there is a lot of smart meter, you can say, installation that was going on before the pandemic, and I think it's going to pick up from now on in. If you look at the numbers, so September numbers are out, and from last year the sales went up by only 8%, and the profit dipped. So from profit of 1 crore, it has dipped to a loss of 2 crores. So things are not looking great for the company, and that is where we need to properly look at how the company is going to perform going forward, which I'll explain in the next few slides. But at the moment, there is decent promoter and institutional holding. The market cap is around 16, 1800 crores, 1700 crores. High debt is a concern, but these are the reasons why the stock is trading at 15, 16 times earnings and looking very attractive. Because if things would have been very good, the stock would have gone up appreciably from the current levels. If you look at the performance, the numbers have slumped over the past few quarters. Over last 2 3 quarters, it has slumped, and you see that stock is struggling to get back to say 81, which was the 2018 high, and now this is the reason why, because from 2020 January onwards, the movement of, you can say, people have got restricted appreciably, and so smart meter installation have got stuck up. So in that regard, what has happened is that these companies have not been making so much of revenue or profits as they were doing, say, before 2019. So it has been a drag on in a roaring bull market, but I think things are starting to change and should change from 2022 onwards. Stock has recovered smartly from lows, but numbers have to follow, and numbers have to, you can say, kick in for the performance of the stock to go up, and I believe the numbers should pick up from FY23 onwards. So sector has underperformed for years, but now the power sector is coming back with solar energy and everything that is around the renewable energy phase. I think electrification and with the smart meter installation would again kick in from FY23. So why I believe this can be a doubler in the next 1 year. Smart meter installation will start picking up. I believe promptly from say February onwards, things should look up for this. And valuations have become attractive. So at one time it did shoot up to 85-90 levels, and then the stock has fallen from there 30-35%. So valuations are very much attractive at around 17-18 times forward earnings, and new tender for meters is around the corner. And this is the news that not a news, but a statement that came in on CNBC TV 18 when the stock surged. So I believe that on television channels, people are talking of new tenders and bigger tenders that are coming out, Genus would bid for and probably get some bids out. So things are looking up now, and power and infra reforms should kick in as elections loom. I'm pretty sure that infrastructure, you can say spending on infrastructure, spending on roads, transport, and also electrification would pick up. So I think next 1 year could be good for the power companies, especially for something like Genus Power, which was doing well before the pandemic, should start picking up from now on in. And risk reward ratio is in favor of an up move. So I believe 55-56 is a strong support. Right now at 68-69, probably any 7-8% decline could be good levels to buy. I think 55 should hold, but you need to trade this rather than invest. Trade this for a year, 8 months, 9 months with a strict stop loss of around 55. So what needs to be done in my opinion is buy on declines. Looking, you can say close to 65, you can build some positions at current levels on Monday, and if the market remains subdued, then around 64-65 just start buying some shares. It is a high risk trade, so keep stop losses, strict stop losses in place. I think 55 can be a reasonable deep stop loss for a 1 year trade. And do not take high risk, do not take you can say huge positions, 5-6% of your holding, and probably see how it goes. I think this can go to 115, 120 in a year's time. So this was my video on Genus Power. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.